the gentleman, Mr. Westmoreland, is recognized for 5 minutes.
Thank you, Chairman. Mr. Chappelle, I was noticing in your resume or biography that when you were with FHA, you actually maybe had the responsibility for the development of the adjustable rate mortgage program. Is that true?
Yes, I worked on the implementation of it, yes.
Okay. Originally, did FHA make that buyer as part of the loan guarantee qualify for the adjustable rate, or what the rate could eventually go to?
We surely didn't use what it could eventually go to, Congressman. It was 30 years ago, so I'm going to have to, I have to go back and read the mortgagee letter.
Okay. Well, I was just thinking that you might remember it because it was a pretty important part of
the only thing I'd say is
you were there.
Adjustable rate mortgages are probably 1% of FHA's business today, a very small proportion of it.
Okay. But if you were making somebody qualify for what the rate could have been versus what the adjustable rate was,
right,
that would have been a smarter move, do you think not?
Absolutely.
Mr. Bergstrom, you evidently counsel, I guess, businesses on how to compete against FHA. What are some of your recommendations that you give them to be able to compete, and what level can these private industries, do they play on the same level, the same guidelines as what FHA does?
Well, I think the MI companies try to price their products so that they achieve the amount of loss paying ability and capital accretiveness that's necessary to remain a viable company. I think it's difficult to compete with one price that the FHA has because it creates a sort of adverse selection between the products and programs that are being targeted for a capital accretive and solvent on a solvent basis versus an all-in. And from time to time, it works out. But with one price for all borrowers over all times, the underlying mix of the underwriting characteristics of the borrowers changes. So in some years when the economy is good, you may have additional premium because losses are low, but in times that they're bad, you have more losses, and therefore you're going to need more premium to cover those. So to basically, the way I advise my clients is just to make sure that they understand the risks and exposures associated with originating a borrower, and then price it effectively.
So basically, are you saying that FHA may have some different guidelines as far as the quality of the credit?
Yes.
Okay. Now, let me ask you this. And we agree, at least I agree, coming from a building background, real estate background, we need FHA. And FHA was started with great intentions as far as first-time home buyers, low to moderate income. Do any of you on the panel see that FHA has gotten out of that original intent and gotten into some places that maybe the private sector, private mortgage insurance, has more expertise in that area of lending than what FHA was really created to do? Ms. Bazemore?
I would just say that I think that while it's continuing to serve some of its historical mission, I think just because of some of these policies we've talked about, it's broadened out further than that, and there are significant amount of loans that they are doing that fall within what the private sector could be doing, and the capacity is there certainly to do it. A comment came up earlier, just in the last 2 weeks, 2 of our companies have raised $1.8 billion in capital, so the capacity is actually growing, and I think the model is working as it was intended to.
Mr. Chavel?
Congressman, it's important to remember that the loans that FHA are getting, these higher credit score borrower loans, are helping the solvency of the fund. But they charge a premium structure that discourages those borrowers from coming into the program unless they have no other options. So those borrowers are not getting a good deal because FHA charges that borrower the same price they charge the borrower with credit deficiencies. So if they're coming in because they have no other option because it wouldn't be the right business decision. But by the fact they're coming in, they're helping to strengthen the portfolio and the solvency of the fund.
Well, and I'm out of town, I'll yield back, but, you know, and I can appreciate that fact that, you know, they wouldn't be coming to FHA if they could go somewhere else. But to me, that's also a telltale sign of the quality of some of the loans that actually may be coming through. But with that, I yield back.
Thank the gentleman. In